chance to attend one of these. And you don't have to attend them. It's really, I think, the most beneficial if you can attend them. What's going on, Adam? Because then you really get the full extent of mentorship in a sense, and you can ask me questions and we can go over things. Some of you have already emailed me stuff. I lost some of the emails, but I've got two of them posted here that I am going to answer. I know one of them is from Adam here about Tesla, and Mario, I should take your name off here, but Mario also has a question here. So we'll get into that in a few minutes. Book recommendation, I'm reading The Path right now. It's about Eastern philosophy. If you're into Confucianism, it's really good. This kind of stuff, I think, really helps you in trading. It'll help you with the mental aspect. And most of what I read is either books on decision-making or the mental aspect, which the trading aspect, I don't think there are a whole lot of good books. So I don't read a lot of trading books. I've read just about all of them in the past. And most of them aren't going to really teach you to be a good trader. So mentorship session today, we are going to talk about earnings season, and what we do during earnings season. You guys know we're in earnings season right now. We've been talking about it in the report. What's going on? Aman shares my last name here. Ayush. All right, I think we're pretty, we're good to go here, and we can get started. So again, remember, go back to the old webinars or old mentorship sessions. We have the link in every report because not only do we go over questions, which also can be helpful. I'm sure a lot of you who have questions, some of the others have the same question. So it's helpful to listen to that part, but especially in the beginning, I try to go over some type of lesson or show you kind of behind the scenes in terms of what I'm doing. So today we're going to talk about earnings. You hear me talk about it every day. You know, we kind of go into a little bit of a different mode during earnings, not only in terms of setups, but in terms of market analysis. You know, we're going to talk about, we may have already talked about market analysis in these mentorship sessions. I don't remember. If I haven't, I will. But you know, we don't start with the stocks in almost every report, even though I'm not trading the market in a sense. Every once in a while, I take a market index position like Brazil this past week. But it sets the tone for how I'm going to be trading. And you guys hear me say slightly bullish, neutral, slightly bearish, very bullish. That all comes from my market analysis, and earnings season helps us with that as well. So why don't we go ahead and get started? Jacob has liked Trading in the Zone. I've recommended, that's one of the few trading books I do recommend. And he gives that a big thumbs up. So if you haven't read that, I think that's a really good book to read. But let's get into earnings. So there's there's a process I'm using. So every day during earnings season, I actually do this every day anyway, but especially during earnings season, it's really important to be tracking all of these. You want to be tracking the stocks that are gapping up and gapping down. So that's routine. I do this every day without fail. It's really simple to do, just takes a couple of minutes. We'll do it right here. That's, I scan for 5% gappers, breakouts, and 5% breakdowns. And when I scan for them, I'm not only looking for stocks that are gapping up, I want them to be clearing ranges. And I have one that you guys know is on the list because I've mentioned it in the report, GWW. Not only is it breaking out, I want to see it breaking a range, and you can see that here. It's not breaking into price action or resistance level, it's breaking out over a range. So I want to see that, or a downtrend. So there might be overhead resistance, but like say this pullback here was really coming off a downtrend, that would be fine. If it's breaking a downtrend or breaking a range, I'm going to be interested. I want to see that big 5% move, and I want it to be on heavy volume, which we see here, more than the regular volume. And you can set your filters when you're scanning for something for 2 times the average volume. That's going to give you a good sized breakout. Now, how many of you guys do this anyway? Do you guys scan for breakouts? Yeah, okay, looks like a number of you do. That's good. Okay, so that's number one. And then you're going to also scan for breakdowns. So this, and a lot of people aren't doing that. A lot of people don't trade breakdowns, and you guys know I'm doing it more in the report. I didn't do it as much before. I used to trade my other accounts because a lot of people, one wouldn't take the trades, and two, when they did, they wouldn't trade them correctly, or wouldn't stick with the trades with me. So I stopped doing it in the trade report account, but I do it more now because I feel like report members are I don't know if smarter is a word, but you guys get it more. So now I'm doing a lot more of this, and you've seen a few of these breakdown type setups recently. So I scan for breakdowns, and it's interesting. One, a lot of people don't trade breakdowns, and when they do trade breakdowns, they're trading them the wrong way. So, and this is the way I used to trade them. So, back when I first started trading, I tried to trade with logic and common sense, and that doesn't always work with trading. So, logic and common sense would tell you if you get bad news on a stock and the price action is poor and the stock breaks down, you should be shorting it. And my first few years of serious trading, that's exclusively what I did. I was trading breakdowns and I was shorting them. I was looking for short setups. What I found was, one, I was not profitable. I did this for about a year and a half, and I was trying to make this one of my bread and butter setups because I was really into shorting at that time, and I was not profitable on that setup. So I was net losing overall, and I couldn't figure out why, because I felt like I had a strong setup, and the news was bad. And what was happening is they might move a little in my direction, but after that, they would bounce, and I would never even get 1.8 to 1 or 2 to 1. So what initially would look like oftentimes a good trade, I'd end up getting stopped out on. And the ones that I won, I wasn't making much on them. And then I did this way too long. I did this for a year and a half, and then I kind of took the Costanza approach. Those of you who are Seinfeld fans know this. That he had the idea that he would do the opposite of whatever his thoughts were because he made so many bad decisions in life. And then the opposite of his bad decisions obviously would be good decisions. And I took that approach where I thought, you know what, why don't I try the opposite? And I started doing a lot of back testing on these as well. And what I found was the trades that reverse had a lot of upside. And I started trading gap downs exclusively almost to the upside. And now gap down trades are actually one of my most profitable per trade setups. So that's what we're looking for. So think about that. We have a bias to trading these gap downs as reversals. So for example, when Netflix gapped down this week, you didn't hear me talking once about shorting it. I think I mentioned this in the report, we are looking at key levels to see if we can go long. Now, we don't go long right now. Now, I do have aggressive approaches where I do go long, and I got stopped out of that one. But for what we're doing as just standard swing kind of plays, we are looking for the reversal play. So that's kind of the bias here. So that's the process. That's the routine. We're scanning for gap ups, gap downs, and we're going to be putting those in a list. Now, earnings season has just started, so it's not a big list for me, but you can see here, this is my earnings breakout list. We've got this season, we've got CDMO, and this was the breakout here. We've got airline stock, UAL, nice breakout over range. We've got GWW, we've got GTLS, nice breakout here, and we've got TTS, which wasn't quite as clean. I usually like a bigger gap, but still, it was a big mover, heavy volume, and there's a lot of room to the upside on this one. It looks like this stock could be bottoming. So I should mention that here is think about these also in combination with a bigger setup. Let me just give me a second here to write this down so I don't think in combination of bigger setups. Now, it's not required, but sometimes you'll see that. Like, we can really focus in and just focus on the breakout and whatever setup happens. But it's good to know here. All right, the stock, was at 22. It's been in a downtrend. Now it seems to be bottoming, and it broke these ranges. So we might be trading this earnings breakout within the context of a bottoming formation. So think about that as well. So let's actually go through what we're doing here. So with the gap ups, we trade the gappers, Then if it's a stock we like as a gap or play, we will put it in a specific breakout watch list. Now, this is outside of my normal momentum list. So I have just a standard momentum list for my sector analysis and stocks I'm finding. Then you guys see many of these stocks in the report. Those go in my main list. Then I have separate lists, and one of them is breakouts and breakdowns. So I'm putting these stocks in the list. Now, some of these can overlap. I can have a stock in the momentum list and the breakout breakdown, but I keep these in breakout breakdown lists because there are specific setups just for those, and I want to be kind of focused on those when I go through these stocks. So I know when I pull up this list, this is all breakouts, and I'm looking for specific setups here. And I know these stocks have their own catalysts as well. So breakouts, we've got the gappers. Then once we've got the list, we're gonna flip through it every single day. So, and this may seem like a lot, but it's very quick. This whole process takes about, once you get good at it, it's literally 5 or 10 minutes every day. So not a big, doesn't take very much time. You're just gonna go through these and see, do I see anything setting up here? And I would say, okay, GWW, maybe we've got something here. Maybe it's broke out, it's consolidating here. Maybe we get a high tight flag, a break of this range. So these other ones aren't really doing anything. And when they're not doing anything, you're not really gonna put them on a focus list. So when I say focus list, for those of you who are a little confused about that in the reports, I have a main watch list. Then that watch list gets narrowed. So the 200 or 300 stocks I'm watching every day between all my different lists, they narrow down to things that might be setting up for a focus list where I expect maybe these things could set up for a trade in the coming days. So that gets narrowed down. That's what you guys get, somewhere between 5 and 25 stocks every day, depending on what I'm seeing. So that's a focus list. And even more narrow than that, sometimes you'll see in the report, I'll have the focus list and I'll title it in play or something like that. Those are stocks, even within the focus list, I might even narrow that even more, and I'll call that in play. So that's another part of the process I'm using to go through these watch lists. Then when we scan it daily, what we just talked about, we're going to monitor each stock for key levels, for setups that are setting up, and then we're going to narrow that. If it is setting up, we'll put it on a list to watch for the next day. And then what I just talked about as well, think about some of the bigger setups within that stock. So that's basically what I'm doing with the gap ups. Now, the gap downs are basically the same thing. I'm scanning for breakdowns. Now, one thing about the breakdowns versus the breakouts. The breakouts, even if I haven't heard of the stock, I'm putting it on the list. Breakdowns, I tend to be more biased towards the popular names, the Netflixes, the Googles, stocks that have been in good trends, or something that's been very beaten down as an extended and could bounce. Stocks that are leaders in their sectors, stocks that I know, because those tend to reverse more, the stocks that people seem to know. So that doesn't mean that's required, but I do have if I know this, if I recognize a stock, I'm more likely to trade that one. There tend to be overreactions on gap downs. For instance, on earnings, the stock could be a very good company. It's just the earnings estimates were too high. So it doesn't meet those estimates and then it gaps down, but nothing has really changed in the company. It just didn't meet these, crazy analyst estimates. Or a lot of times, in the earnings announcement, maybe the numbers were great, but the company said something that spooked people and the stock gaps down. Or there tend to be overreactions. And even if the news was valid in terms of the gap down, a lot of it gets priced in on the gap down and then it'll reverse. So, and that's another reason I like gap downs on good stocks, because it's a good stock. So eventually it is going to probably reverse. So keep that in mind. Create the watch list, just like with the gap ups. Look for setups. And then remember, we have a bias towards reversal plays. Now, when I do short is usually when the reversal play fails. I'm not just going to short it directly. But if it made an attempt to bounce and then fails, then I might short it. But even that, I don't do a lot unless the market is range bound or downtrending. In a really strong market, I'm less apt to do that because the market's going to kind of pick up the stock, or could pick up the stock as well. So that's essentially my daily routine. Scan for breakouts, scan for breakdowns, monitor these things, look for the setups, and then eventually trade them. Now, there are a ton of, basically, with the gap ups, there's about 8 setups I look for. With the gap downs, there's about 4 or 5 setups I trade. So there's 12 setups in all. I can't go over all of them right now, but in general, you think about, standard, you guys know, kind of get a feel for what I'm doing in the report every day. But on a basic level, look for, on the gappers, you can look for pullbacks. There's other setups too, and there's other numbers I look for float, short interest, and do some calculations with those. Breakdowns, look for reversal levels. Look for when it gets beaten down and puts in a reversal candle, those type of things. And all the setups are going to be related to that. So that's what I'm doing. And that's essentially the overall process. And then remember, earnings season gets a little difficult to trade because a lot of times there are stocks you want to trade, but earnings are coming up and you can't trade them. There are a number of stocks right now that I want to trade. I think Facebook was setting up last week where I was really interested in it. You can see here, but I knew that, I think it was on this pullback here and hold. But I knew on I think it's the 26th this week, Facebook is reporting. And this is going to be a big week because we've had Netflix report, but this week, Google, Amazon, and Facebook all report. And I think at some point this week, we're going to have, like the biggest day last week, I think we maybe had 70 stocks report. It's either this week or early next week, we're going to have 400 stocks reporting in one day. So really big earnings week coming up. So I forgot what I was saying here, but oh yeah, earnings. If you've got a stock that's reporting within the next week and a half, you're probably not going to touch that stock no matter how good the setup is because you just don't have the time. Earnings is coming up. And we don't want to hold through earnings because, if it gaps down, we're going to get crushed. And no matter how strong a stock is, it's really gambling going into earnings. I mean, Netflix was one of the darlings of the year. The thing has been up. If you just go back to January, it's up 200%. Sorry, 100% since January. So if you just went on, how strong the stock is, the kind of news that was coming out, there were some people calling for a gap down because of some of the numbers, but even they're just guessing, and they got it right this time. Because even when it gapped up, those same people were probably saying that in here when it gapped up. But you're just guessing here, and then if this happens, you're going to get crushed. So we need to protect ourselves in here, and we are not going to hold through earnings. That being said, there are some strategies where I do, especially with options, which I don't do here in the report. There are ways to use options to mitigate the risk or play volatility if you think the stock is going to be really volatile in one direction or the other. Also, if I'm sitting on a big win, I haven't done this in the report recently, but I think in 2016 or maybe early 2017, I was doing some of this where I would be sitting on a 20 or say, 20, 30% win on the stock. And if it was going into earnings, since our risk was mitigated from our entry point, meaning if you're up 30 points on a stock, like let's say we had got into Netflix here and never got out, 292, and now it's at 400. Now at this point, let's not even say 292 because I probably am not going to be holding that long. Let's say we play this. Let's say we play it right here at 355. This consolidation break right here. Now going into earnings, we're at 400. We know we have a 45-point cushion. So from our entry point, we've mitigated the risk because we've got that 45-point gain. So even if it gaps down 50 points, now we've only lost 5 and we're okay. Now you are giving up the gain, so that's something to think about. But if you think about where the max loss is probably going to be, you're going to be all right. So if you got stopped out of this, maybe you just lose 5 points here. You would have been okay. So occasionally I will do that. I haven't done that recently. I've been more apt to lock profits in. But that's something to think about. And then once you've got earnings out of the way, it becomes very easy to trade. So it is a little bit difficult during earnings season in the sense that you have to pay attention to when your stocks are reporting earnings and you can't trade a lot of stuff you want to trade. Okay, so that's what we're doing with the specific stocks. Now there's a few other things to think about. Okay, I see your guys' questions here. I'll get to them at the end. Number one, monitor overall earnings reactions for market strength. So this is not, you're not thinking here about trading a specific stock, you're thinking about the overall market, and it helps guide how you want to be trading or what you think of the market. So a couple of things we're going to think about. One, are strong releases being bought or sold? So there were a few quarters ago, it was a little concerning because a lot of strong stocks had good earnings reports, but they were either flat or even red after earnings, or they turned green and didn't do anything after that. And that's a little bit of a concern if you're continually seeing that, where you see strong earnings and yet you're not getting big moves or the market's not moving. And if you start to see that, that's a concern for the market. If I pull up SPY here, that was happening. There were a lot of factors that came into play before this big meltdown in February, but it was a little concerning in here that we were seeing a lot of weak earnings reactions where stocks would report good and you just wouldn't see these big moves in them. And then you start thinking, why is that happening? And it gets you to be cautious. So we were actually very cautious going into this big move down. I think I was only holding one position, maybe two when this happened, whereas I was trading very aggressively through this period. And there were some other factors as well, but that's something to think about when you're trading earnings. Also, how many breakouts are there versus breakdowns? Are you seeing a lot of stocks break down? When you're scanning for this stuff every day, so you get a feel for what's happening. If my list is building more from the gap downs and the gap ups, I'm going to ask myself, why is this happening? Why are there so many more gap downs and gap ups? And that's going to be a concern. If I'm seeing more gap ups, then I like what's happening in the market more. So that's going to guide you in terms of your overall market analysis. And if you're seeing some concerns, I'm not going to trade as aggressively. So if I start to see more breakdowns, if I don't see the kind of reactions I expect to be seeing, I'm going to trade more cautiously. And this kind of stuff is very important to a swing trader, more so than a day trader. With day trading, with my day trading at least, I'm very focused on just what's happening with that stock and maybe the daily trend of SPY or the Qs, depending on the setup. But I don't really care about what's been happening in the overall market, what I think the trend is going to be. But for swing trading, that is very important. If all you're focused on is trading setups that trigger, you're probably not going to be a winning swing trader. You really have to understand the market at a deeper level, and that's why a lot of swing traders fail. They don't see that, and they just take every setup that they're seeing. You guys know there are periods where I get very aggressive and periods where I might barely trade. And I know it's kind of a catch-22 too for you guys or me with a swing service, that a lot of people join the service and they want trades. And I'm sitting here saying, don't trade. But you have to do that to be a successful swing trader. You need to know when to push it and when to pull back. And when you pull back, if you're thinking about it correctly, by not taking those trades, you're probably saving money, which is saving money is like making money. So keep that in mind in terms of market analysis. Then monitor sectors. Take note of when you see all these banks reporting, and we had mixed signals in banks. 2 or 3 of the big guys had weak earnings and 2 or 3 of the big guys had strong earnings. But monitor what's happening within sectors. If you start to notice that software stocks are all breaking out, that's an area you want to be paying attention to. If you start to notice that retail stocks are starting to break out, that's a sector you want to take notice of. If you notice that steel stocks are breaking down, that's a sector you want to take note of, that they're not having good earnings reactions. So monitor what stocks within sectors seem to be doing. And that will help you with your sector analysis and say, okay, you know what, maybe this sector I should not be paying attention to. And there might be another sector where you say, you know what, I wasn't paying attention to this sector, but all of a sudden I'm seeing these earnings breakouts. I should be paying attention to this sector. So we'll help you with your sector analysis as well. And then monitor index divergences during this period. Take note of the fact that if during earnings season you start to see a big move in the Qs, but SPY is not doing much, then you know, okay, tech is something to be paying attention to. So monitor those types of things as well. So everything we talked about here is going to make you a better trader. One, in terms of specific setups, earnings, the way to be looking at these earnings plays. And then obviously you're going to fit in your setups related to those. And then it's really going to help you also in terms of monitoring the market. So let me quickly go through the way, an easy way to scan them. Now you can use a breakout scan in TC2000 if you're using TC2000 or whatever your charting platform is. The problem with TC2000 is you can't filter for earnings. So I can't say 5% breakouts, 2 times average volume, and put in whatever parameters I want, and then say, okay, now I want these only to be earnings. So because of that, I have to go over to FinViz here, and maybe your charting platform allows for that, but TC2000 doesn't. So let me give you a simple scan on FinViz here, and FinViz has more and more pop-ups, so you have to deal with that a little bit unless you're on the paid service. And honestly, I had sampled the paid service and there wasn't much to it that was helpful, unless you want to get rid of pop-ups. But we're going to set up today 5%. Now the other thing is you have to do it the day of. So I don't think we're going to get the 5% movers from Friday because it is now Sunday and it factors today as Sunday. But let's say price over $5. We don't want to be trading any junk or penny stocks right now with this setup. Average volume, and here the pop-ups go, but average volume, we're going to say over 100,000. We want to make sure the stock is liquid and there's no manipulation. We could set this at 200 if we wanted. I'll just keep it loose at 500. Relative volume, that's what I was talking about, the big volume spike. 2 times would be 200%. We'll just keep it a little looser at 1.5. And then we are going to filter out for earnings. So earnings date, let's say stocks are reported yesterday before market open, and it's not going to give us anything. But on a normal day, it would get, if we did this on Friday, it would give us all the stocks that reported before the market open, which is they're either reporting after market close or before market open. And then also we could do yesterday after market close. We would be doing today before market open, yesterday after market close, or you could just do today and yesterday, and you would get the list. So that's how you're going to scan for it. Since this is Sunday, we're not going to get it to spit out what broke out and broke down. But what we'll do is, so remember that 5%, you can do the price wherever you want, average volume at least 100,000, and make sure the relative volume is 1.5 or 2, and then set the earnings date. And then you're going to get your list of stocks. Let's get rid of these filters here. And let's just go through all the stocks that have reported over the last week. So we can also set it to all the stocks that reported. Let's just do this month. And then we can get just filter it by performance. And we'll say performance this week. So we're going to get the stocks that broke out this week. One, we can see the stocks that broke down. So you can see here, there's probably a few I could add. I haven't run the Friday earnings scan yet, so I'll be having to do that today. So you can see I've got AA on my list, and we see AA here. Skechers I haven't put yet. I think this was Friday. We had the big gap down. That's definitely going to go on the list. You can go into charts here and go to candles so you can see them a little better. We can see here RECN gap down on Thursday. This is definitely one, and I'll just do this right now with you guys. Breakdowns, we're going to add REC. What was that, N? RECN to the gap down list. And we can see here, big gap down on Thursday, definitely something to be watching. Skechers, we saw gapping down. This is definitely going to be on my radar as a gap down play. And it already bounced back strong. This looks like a lot like Netflix did, even though Netflix was a stronger stock going in. But we did have a strong move to the upside here on Friday. Now we're going to monitor to see if it consolidates here, breaks into the gap. We could potentially trade Skechers. So you might see this on our focus list. HZN, I didn't include this on my list because it didn't really break down below a range. OMC, not only gap down, it's continuing down. So we could look for a reversal pattern on this one. Let's see if it's going into a support range. 65, 66 would be a good level for it to pull back in, give us a reversal candle, and potentially trade a reversal. So we could add that one to our list. The reason I didn't was because it's not that volatile. So I didn't put it on our list. But you can, if you miss some days, you can do it this way as well. Just kind of, go through the percentage gainers and losers. eBay is already on my list here. Ozark should be on my list. I don't know why this one isn't. OZRK, that's a nice breakdown. This tends to reverse, so we could add that to our list. You can also go into ownership here, and you can get the float sizes and how much short interest there is, and that type of thing. So let's go back to performance and look at some of the breakouts. So we were looking at the breakdowns. Let's go to breakouts now. And you can see here, we've got a bunch of them here. CDMO is on my list. GTLS is on my list. UAL is on my list. Charts, candle, no gap here. CDMO is on the list. I didn't like the way DWCH closed, so I didn't put that on the list. LLLN or IIIN. Big breakout here and continued. This definitely should be on my breakout list. So we're going to add that one to the breakouts. It's also got a very low float size and huge volume. So we're very interested in this one. CLF on Friday. Really nice breakout. This is steel stock. I'm definitely going to be watching steel to see how the other steel stocks react to earnings. So that's on our breakout list now. LXTB. Get that right. LTXB. LTXB. Breakout, nice move here. It's a bank, low float, a lot of volume coming in. The reason I didn't put it on my list, what I talked about, I don't like them when they're gapping into a range. So I didn't include this one on my breakouts list. GTLS is on our list. MTG, there must be some reason I didn't put it on my list, even though it looks like a nice breakout. Yeah, there was resistance right above it, so I didn't put that one on my list. So you can see the process we're using to track these things. I don't think there's very many other. FFIN on Friday. Decent breakout. Bank, we're seeing some interesting moves in banks after a slow start. Not enough volume here on the breakout, so I won't include that one on the list. So you guys get the idea here. So that's what we're doing. We're building these lists, and we're going to go in and see if there are any setups. So we've got these lists started here. You can see again the breakdowns and the breakouts. I'm going to be going through these every day. And when I see something starting to set up, you'll see it on the focus list in the report. And now you know a little more behind the scenes in terms of what I'm doing when I put these stocks on the list. So this is the exact process I'm using every day to pick the stocks I'm potentially trading that are earnings breakouts. All right, guys, so that's what I want to show you today. That's the lesson for today. You guys can start to put this stuff into practice, and you're going to really find you're in tune with what I'm doing now in the reports. Okay, so now let's get to your questions. I had one from Adam here about Tesla. So let's see what he said. He entered on 7/17 at 3:23. So 7/17, 3:23. Okay, few concerns here. It did remount, but one thing I want you guys to remember is I think because I talk about remounts so much, and that's really a big factor in our pullback plays because a lot of pullbacks these days, they don't just pull back to support. You see stop gunning, you see a lot of people get stopped out under that support, and then the stock comes back up. That's very common now. So you see me all the time talking about remounts. Remounts is not a setup. I know some of you guys will think of, I'll ask you, when you guys email me, why did you enter this trade? And you'll be like, oh, it remounted. And I will ask, okay, what is the setup? And the answer I'll get is, well, the setup's a remount. No, remount is not a setup. It's a factor within a setup. So let's see if there was an overall setup in Tesla. I could see you maybe thinking about this as a pullback play, but not, it wasn't the greatest in terms of what we're looking for in a pullback. Wasn't trending. It's within this messy range. What part of what was concerning is the volume pattern is not good. So it's not like we're seeing a ton of accumulation coming in. There was some here, but then we got a big sell-off here. So that kind of balances that out. So I would say the entry is not a slam dunk entry. That being said, there is a benefit in this in that you got really good risk reward, Adam. So where you entered, if you're placing your stop, say under the 50, at about 312, and let's say you entered at 321, that would be 8 points. And if you think this can make the top of the range, that's still a very good risk reward. So sometimes even if the setup isn't the best, I'll still take it because the risk reward is so good. But we also have to think about the fact that can it get to that 370 level? And we're in earnings season, so we have to factor that in. Can it get to that 370 level before earnings? On a normal trade, you don't have to worry about that. Earnings is not coming up, and you can just sit back and wait. If you have to hold it for a month and a half, that's fine. But with this one, earnings. Well, actually, anybody have off the top of their head when earnings is off on Tesla? But I think it's in a week or so, if I'm right. If that's the case, you don't have time for it to really make a big move. Okay, so you got in at 323, stop loss 8 to 10 points, good stop loss. Target 20 to 30 points. You got the risk reward. So I think you were thinking about it the way I was, although I was looking, it had to make a bigger win. Okay, 8-1. So yeah, you didn't have a lot of time. Well, I guess you entered at 717. So maybe it's a little better because you entered on 717. So that's 2 weeks. If 330 is your target, is that where 20 to 30 points. So you entered, now you need to get, yeah, that's a little ambitious considering earnings is so close. I got excited with the crossover or the remount. I think that, yeah, that is what you were thinking. Stopped out at 313. You risked more than 1%. Yeah, on a setup that's not the best setup, I would keep that risk under 1%. So if I was looking at myself and grading this, remember last mentoring session we talked about how you review your trades, and if I was grading myself on this one, I'd probably give myself a B or B minus. So it wasn't a bad trade, but there are some things you needed to be thinking about when taking this trade, and then ask yourself. I always look at the opportunity cost when I'm taking a trade. So if I pick this stock to trade, and you can only trade so many stocks, were there better opportunities that I could have been trading? And I would say probably. So not a bad trade at all. I know I'm getting a little negative on this, but there were some real positives, especially you talked a lot about risk reward, and risk reward was very good on this. Okay. Another question here. Stay away from. Okay, Mario, I accidentally erased part of your question that I had pasted here. If you are attending, shoot me that question again in the chat. All right, let me get to your questions here. Jacob bought Netflix at 340 after hours in anticipation of a next day reversal. Now that's a little more aggressive than what we're doing in the swing report style of trading. I did something very similar. I talked about my more aggressive trades. One, I day traded it after hours. I took two different aggressive swings, one very similar to yours, which I won on, one which I entered at a higher level, and I got stopped out of that one. But do you ever make that play, or are you always waiting? So that's your answer. It depends what we're talking about. For my standard swing strategy, no, I would not enter there. But for more aggressive type strategies, yes. If we do have good earnings this week, can that push SPY up to 283? Definitely. SPY is at 279 here, consolidating. Hasn't really broke out of this 280 level yet, but made the kind of move we wanted to see, consolidating here. Good or strong earnings would definitely, especially considering who's reporting this week. We have the big guys that everyone's watching reporting this week, the Amazons and the Googles and the Facebooks. If these guys all report strong, I think not only would we hit 283, we could test the high. So I think a lot of it is going to be factored into that. Do you feel that scaling out once in green screws up risk reward? Yeah, Eric, that's why with swings, you don't see me doing a lot of scaling. I might trail, you see me moving my stop up, but think about this. If you start to scale out at 2 to 1 or 2.5 to 1, and then the stock pulls back, you only end up getting like 1 to 1. And that's not the way you want to be trading. So I tend to get in and out where I want to. And then if the stock breaks a certain level, I will get back in. So let me give you an example of that. Let's say with Netflix, let's say it pulls back to the bottom of the range here, show some strength, and I decide to enter here at 346, all right? And my stop is gonna be, let's say 341. So I'm risking 5 points. Now, let's say it gets up to top of the range here at about 380. I've got an amazing risk reward at that point. We're at a resistance level, but maybe it breaks out. I'm going to take my profits here, and if it does break that level, I can always get back in. So if you're into sports, the way I compare it to is baseball and football. With football, you take your quarterback out, you can put him right back in. In baseball, you take your pitcher out, you can't put him back in. Trading is like football, where if you get out of that position, you can always get back in. And too many people think in a box, like this is the trade and that's it. No, you can get out here. If it breaks that level, just get back in. I prefer that to scaling. And I did a big statistical analysis of my trades a few years ago. I actually hired someone to help me with that as well. And that was one of the things that was found, that if I took profits, I would have been more profitable than scaling, because I used to scale more. Now I do very little scaling. SMPL on the 16th, valid entry point. Let's take a look. No. So if you're entering on the 16th, Glenn, I would not enter here. I'm wondering what your signal was for entry. All it's doing is just pulling back hard. Your entry would be, now it's interesting because the entry spot is the same, but the setup is different. So once it pulled back here, held the 9 and started to bounce here, one of these 2 days, you could have entered. And that's a good pullback setup. And I know it sounds a little nitpicking because we're entering essentially at the same spot, but here you have confirmation, here you have nothing. So this is where I would be entering, not here. Okay. You did pick a good stock to watch. Low float, good breakout. You're obviously doing the kind of, you have the thought process, Glenn, that I was talking about. So that's really good. All right, Salim, the other day you mentioned TAL. What are your thoughts and a good entry exit? All right. Yeah, so education stocks, one, the reason TAL made my list was education stocks were doing good. If we pulled this back further, it's been in an uptrend, even though this is a weird move here. And now it's testing that 50-day moving average. I would wait to see if it starts to show strength around the 50-day moving average. You know, we had this nice move here, but it hasn't followed through. If we start to see that it looks like it's going to hold here, and it's not showing that yet, it's going to drop back below. That's where I would consider entering. And at that point, you would have a good risk reward as well. All right, thanks guys for the Tesla earnings dates, Joseph, Jacob. All right, Petru, would a break of 327 have been better on Tesla? Well, one of the issues with Tesla is the two problems with Tesla is earnings coming up, and number two, the volume pattern. So one, regardless of price action, I would want to see money starting to come into that, and we're not really seeing that yet. So Tesla is not high on my list. Uni has a question about BRZU. When you entered at 1935 and stochastics ran till 21, at that point, I raised my stop to entry, but BRZU tanked and I got stopped out. At what point do you move your stop? One, I'm not going to move my stop up until I'm sitting at least 2.5 or 3 to 1. So I want to be, and I also do not want to get caught in the natural volatility of the stock. So you have to be careful of that as well. You don't want to get stopped out of a good trade just because of its kind of natural volatility movements. So when you moved your stop up, not stochastics, you meant stock price at 21. At 21, I'm not moving my stop up yet. And I hope I didn't say that in the report, because that is not correct. I don't think I did. At that point, you're still natural volatility could stop you out. Now, if you were still holding here at 24, I definitely would have my stop moved up, not only to entry, but probably a little higher than that. Now, obviously, I'm out of this, so it doesn't matter. But that's the way you have to be thinking about moving your stops up. Okay, so yeah, and you graded your trade as a C minus. If you were remember when we talked about grading trades, we break it down to entry, risk management, trade management. I would say your trade entry was good. Obviously, you entered where I entered, and I like the setup, so I'd give that an A. Risk management, the risk going in was good. You know, we were going for 2.5, 3 to 1, so good. But the trade management was not good for your trade here because of the way you played your stop, and you basically stopped yourself out of a strong trade. Okay, can you explain why your target was 24 and not something more obvious like 26.3 at the bottom of the gap? Okay, so let's see here. Okay, the gap is at 28. So I'm not sure where the 26.3 is coming from. There is no, unless this gap is filled, but you might be talking about this. I think you're talking, it's the top of the range right here. Yeah, you could be thinking about that. You also could think about this level as well. I have been, remember when we talked about this in the trade review and we went through my trades? I went through that drawdown period, and remember, whenever we go through drawdowns, we want to find any adjustments we need to make. One of the adjustments I made during that drawdown period is taking quicker profits unless I really saw something that made me want to stick with the stock. So you have seen me loosen my target level and go for bigger wins when I did with Netflix, and that ended up being fantastic. But there was a really strong strategic reason to do that. But for the most part, um, coming out of that drawdown that I had, one of the adjustments was take profits, and that has been really helpful during the last couple of months. So I have been more apt to, once I get 2.5, 2, 2.5, 3 to 1, to take the profit and not go for bigger trends. Um, and also, the market has been a little bit concerning. So I haven't been as apt to take the profits recently because of that as well, or let profits go longer because of that as well. That being said, this is judgment calls, it's subjective. Um, I think it's totally valid if you go for the bigger win on this. And I do like the setup overall. And like I said, between baseball and football, with football, you can go back in. We can go back in here. So that level you talked about, if it breaks that level, I can always get back in. If Brazil consolidates here and breaks 25, I could get back in. Another equally valid spot is 28, where this open gap still is, and you could go for that, and that would be a huge win. So you're right. I mean, there are different ways to play it, David. You can look at it one way, or Kellen, you can look at it one way, and that both ways are equally valid. It's just a strategic decision I've made to take profits and book my wins. Okay. How did you know not to get out of Brazil when it gapped down on Thursday? Set it and forget it, David. So it hadn't hit my stop. So one, there was no reason because of that. Now, when something is a little bit concerning, sometimes I will get out. So 1992 was I think my entry was 1990, 1992, somewhere in there. Uni wrote 1935, but I don't think mine was 1935. Okay, so let's say 1990. So my stop was down here. And when it gapped down on this day in the morning, not only had it not hit my stop, it had just barely got the low of the day, made it to my entry level, and I hadn't moved my stop up yet. So there has to be a real strategic reason for me to get out before my stop was hit. And with Brazil, was there? No, there was no real concerning news coming out. It was within its natural volatility. I know Brazil does this kind of thing a lot. So there was nothing telling me, oh, I just have to jump out. And if it did hit my stop, so what? It's just a normal loss that I would take. That's okay. But I don't want to micromanage positions unless there is a real strategic reason to do that. So that's why I didn't get out of Brazil that morning. Okay, Mario, you've got your full question. Okay, you wrote, here's my full question, and then it didn't continue. So I need the question. Okay, thoughts on RHT? That is from Jacob. I like it. Gap down, reversal. You could have taken it here. I don't think there's a really strong trade at this point. Maybe you could, because you're getting good risk reward, you could enter here, use 3 points, and maybe it makes a big move in here, either to the 50 or top of the range. So you could enter here and get good because of the good risk reward. This was the slam dunk trade right in here. Now, I think if it's formed a high at 150, I think if it broke 150, you'd have a good entry. I like it so much. I haven't been really tracking this, but I'm going to put it on my watch list. I do like the potential break of 150. So good one, Jacob. Okay, Les, what's going on, Les? I work with Les quite a bit. I've noticed my trades have improved more since deciding to wait till closing prices versus midday entries. How do you feel about that? You guys know that I take a lot of entries towards the end of the day. That's not a requirement. It's a function of what I've seen over the last 6 to 8 months, that there tend to be a lot of early day reversals. So there's not a hard and fast rule. We might see that now, but 6 months from now, maybe we start to notice that early day trends tend to continue and get followed. If I start to see that in the market, then I will not wait till the close. I'll take more midday or even early day entries. So that's really, I get asked that a lot, especially recently, because you guys have seen a lot of that. But that changes. It's really a function of what's happening in the market. All right, RGNX from Ayush. Let's take a look. RGNX, big trender, huge move, biotech stock, low float. You got to be careful with the low float biotechs. Got in 717, around stop 74, target 85. Risk reward is good. Setup pretty good. Trend pullback. Got the remount here. I like it. We'll see how it plays out, but I think you've done a good job with this trade. Now, whatever happens, happens. But I think it is a good trade. If there was anything, maybe you're a little concerned because of how extended the stock is. Other than that, good setup. All right, Pablo, does it make sense to, instead of exiting at a predefined target, to instead move your stop up close where it gives you opportunity to run while also locking? I get this a lot, question that people want to use tight stops to create these great risk rewards. I think that's a mistake, because you're going to get stopped out of too many trades, because you're not taking into account the volatility of the stock. So if you're going to use a tight stop, just make sure you know what the volatility is of the stock and you don't get stopped out of good trades. Otherwise, what you're going to find is you get stopped out just way too much, and the stock will run the way you thought it was going to, but you just continually get stopped out. All right, Uni is still in the LABU trade. Should I still be in the trade? I'm at 1.5 to 1. No, I can't give you advice on your own specific trades. I just will say that if I was in LABU right now, I don't know where the entry and exits were, but if you're sitting on 1.5 to 1, I probably would not take, regardless of the setup. It doesn't look like it's going to break down, but it could. But I would not get out here. I'd put my target at the top of the range. That's if I was in it. I would not get in it right now. Adam, do you scan for gap downs, only earnings? No, I scan for gaps, ups and downs every day. For what we're doing in the trade report, I like to focus on the earnings, because it's a direct, real, strong catalyst. So a lot of the gap ups you get and gap downs you see are in junk type stocks, are rumor based, so are manipulated. So I don't like to trade those. You don't see me doing much of that. But earnings definitely, and the stuff we're talking about in earnings, you can definitely apply it to other breakouts as well. Okay, Mario, here we go. Here's this question. Do you day trade the stocks you swing, or do you stay away from them so that it doesn't conflict with your idea of swing? That's a really good question. And then also, is your position size smaller in the day trade? Let's start with the first part of that question. I will day trade and swing both, but I trade them out of separate accounts. You need to separate. I do not day trade, even if I'm trading different stocks. I don't day trade and swing out of the same account. And I think it's important for your mind to be able to separate the two. Otherwise, you get really mixed up in what you're doing. And if you're taking swings and you're day trading out of it, it's going to tend to make you micromanage your positions. So I keep them separate. Second question, you have backwards. your day trades should be in a much bigger position size. Let's go over this a little bit. And I have had some people do this reverse, and I'm not sure why you guys are doing that. But let's think about this here. If I was day trading Netflix, I don't have to worry about a gap down overnight. I'm just day trading it what's right in front of me. It's not going to gap down. I can get out as I see the price movement. I don't have to wait till the next morning. So I don't have to worry about that. And on top of that, my time frames and my stops are much tighter. Whereas on Netflix for a swing, I'm going to be risking $10 or $15. On my day trade, I'm only going to be risking 1 or 2. You know, if we go to the 5-minute chart here, and let's just see what happened on Friday. Let's say this was the setup here. So Netflix broke out on Friday. It pulled back. It tested the previous close. That's what this dotted line is. Let's say I'm entering this setup here as it bounces off the previous close, and we got the hammer here. So my entry is going to be 364. My stop is going to be only about a point here. And you see the target here went up to 366. So you would have got 2 to 1 on this, right to the 50 period moving average. But you can see here, I'm only risking $1. So why would I take a smaller position size? If I could take 100 shares with $10 risk on the swing, I should be taking 1,000 shares here, and I'm risking the same amount. Now, actually, that's a little backwards. That's a little wrong because I don't risk as much on my day trades. So risk should be smaller, position size shouldn't, because of the frequency of day trades. But still, I would probably take 500 shares. So I hope that made sense, but I'm actually trading bigger on my day trades than my swings. All right, Jacob, got into race. So that's awesome. You actually own Ferrari. So you can say you own, I guess you couldn't say you own a Ferrari, but you own Ferrari. You got in on 712. Okay, nice setup here. 139 with target of 150, which has not been hit yet. Lofty target range, what should I do now? Stop was at 136. Okay, 139, 136, you only risked $3 and you got $6 out of it. So you were at 2 to 1 at one point. Now you are not. I don't think you can be, and you can't be exiting where you are right now. I would place my stop at entry. Oh, okay, 139. That's a little tricky because you could just get stopped out and it pulls back up. One, I don't think we know, I don't know when earnings is on this, so that's going to factor into it. If earnings is coming up, I'd probably get out right now. It has been volatile. I don't think there's a good answer to this, really. You could go either way, and I wouldn't criticize either one. You're going to do one of two things. You're either going to place your stop at entry level and just make it a break-even trade at this point, or leave your stop. I know that's not the answer you probably want to hear, but either way would be fine here. If you want to protect yourself and just make it break-even, or if you're willing to take the small loss. There's nothing in here telling me that this is a failed move. So I think either answer is fine. Okay. Okay. Bought Netflix at 381, and stop is at 340. Wow, that's a really wide stop on this setup. I think the stop is, well, unless you're going for a big trend move and you're willing to hold this a long time, you know, you're risking 40 points. So to get 2 to 1 on this, you need to move 80 points, which would be 460. So that's a big trend play you're looking at here. So I think if that was your idea and you're willing to hold this thing for months or 6 months or however long it would take, maybe it could happen quickly. then it's fine. Otherwise, I think your risk was way too wide. On stocks that have a history of gapping down small and then going red to green, is it good or bad when I want to go long to wait a day? I think it's good to wait a day and wait for confirmation. And your question is, will I miss too many moves? George, yeah, that is there's all when you wait for confirmation, there always is the risk of missing the move then. So it's kind of, there's advantages and disadvantages to each, and you just have to make a decision on what's more important to you. So I don't think there's a right or wrong answer to that. It's just a preference. And the stocks, and I do both. So it's often how confident I am in the stock. Okay, yeah, 8-1 earnings on Race, so I think that makes it a little easier. I would get out now on Race. Earnings are coming up now. Okay, what's going on, Guillermo? All right, so that looks like the extent of your, well, a few more here. I'll take a couple more. When you get into a gap with short interest, how do you decide on a good stop loss? I'm basically looking at ranges and my own potential risk reward. Okay, what does price action mean? Price action is obviously the prices we're seeing here. Are we seeing trends? Are we seeing any significant moves related to setups we would take? Versus volume, which is what's behind the stock, what's pushing the stock. Okay, guys, really good session. You had a lot of great questions here. The next one, I don't have a date yet, but will be coming out in a couple. I'm trying to do again 2 a month, usually every other week. So we'll have another one coming out in a couple of weeks here. Hopefully you found this helpful. Again, give me feedback. Let me know if you find these helpful and what you find helpful. And if you have any ideas for lessons, some things you think you guys need help on, because I can decide what I want to do, but with the mentoring process, a lot of it is what you guys feel you need, and then I'll cater to that. So I want to know what you guys want, what you guys need, and then I'll cater these towards what you guys want, because that's part of what mentoring is, the kind of back and forth. So report will be coming out either later today or early tomorrow morning. It'll be an interesting week this week. We'll keep your eyes peeled in the report. I haven't done my analysis yet, but we'll go over exactly what we're looking at going into the next week here. I've got the 30-day challenge. Keep following the blog. You'll find that very helpful. And remember, I do mentor you guys as well. So, all right, guys, I will see you with the report tomorrow. And in a couple of weeks, I'll get the date out pretty soon on when the next mentoring session will be. All right, guys, have a great rest of your weekend here.